This is Optimal Finance Daily, episode 1960. Why get life insurance if you're financially independent? By Sam of financialsamurai.com. And I'm your host and personal finance enthusiast, Diana Merriam. Now let's get right to it as we optimize your life. Why get life insurance if you're financially independent? By Sam of financialsamurai.com. I'm often asked, why get life insurance if you're financially independent? It's a good question that merits a deep dive. I became financially independent in 2012 and have life insurance because I had children in 2017 and 2019. Many of you will face the same dilemma once your passive income can cover all of your living expenses, or once your net worth reaches 20 times your gross income. After all, you're one of the few who care enough about your finances to hear this. But I'm a little surprised why the folks asking couldn't think of the many reasons why life insurance might be necessary after reaching FIRE. I guess if you haven't reached FIRE, don't have a family, or have never sat down with an estate planning lawyer, it's hard to know. Here are some reasons why life insurance is a good idea despite being able to self-insure. Benefits of life insurance if you're financially independent. Here are 7 key reasons why you should get life insurance after reaching financial independence or keep an existing policy. Number 1, you believe you'll die before the term limit is up. Despite all the blood work and physical exams, insurance companies can only come up with a best case guesstimate of when you will likely die. Despite all of the actuarial data, you should know your health better than anyone. If you think you've got a greater chance of dying before the term limit is up, then life insurance becomes a better deal. Number 2, you want to provide liquidity. You may leave behind stocks, bonds, real estate, fine art, and collectibles, but they require an extra step to become liquid. Further, don't assume that all your assets will neatly go to your heirs as your will directs. Probate court can tie up your assets for months or maybe years. Life insurance is a way to diversify giving. Even if you have a trust and can avoid probate, illiquid assets take time to sell. You may also not want your heirs to sell certain assets. On the other hand, life insurance payouts can be available to your beneficiaries in as quick as 7 days. However, the typical payout is 30 days, which is still much faster than illiquid assets can usually be sold. Number 3, you plan on setting up a life insurance trust. A life insurance trust is an irrevocable, non-amendable trust, which is both the owner and beneficiary of one or more life insurance policies. If you set up a life insurance trust, it doesn't count towards the $11.58 million per person estate tax limit, provided it has stood alone for a number of years. There's a limit to how much isn't taxable, but you'll have to check with an estate planning lawyer. Number 4, the premiums paid are worth the peace of mind. If you're financially independent, the monthly premiums aren't as big of a deal as they would be for someone who isn't financially independent. Therefore, it's easier to get life insurance if you're financially independent because you can afford it, and in turn provide greater security for your family. It's the same logic as comparing people who can pay cash for a home but take on a mortgage because the interest rate is so low, compared to the person with poor credit who needs to take out a loan and has to pay a much higher rate. Number 5, you still have a large amount of debt. You might have a massive net worth, but if you also have a large amount of debt, your net worth can disappear quickly during a downturn. The time to sell anything is during a bull market, not a bear market. Think about how many wealthy people had to declare bankruptcy in the last recession due to being over-leveraged. Further, if you want your heirs to hold on to the assets you leave behind for sentimental reasons or because you believe they're a good investment, life insurance can help. Number 6, you have or plan to have dependents. If you achieve financial independence at a young age, fantastic. You may have dependents already or plan to in the coming years. When you have people depending on you or want to start a family soon or in the not too distant future, it's a good idea to shop around for life insurance rates. Life insurance premiums rise as you age and can spike dramatically if you develop a health condition later. Use your youth and good health to save money while you can and protect your family. I wish I bought more life insurance before I had kids when I was younger and had fewer items on my health records. And number 7, your estate's value is above the taxation limit. Given you've got to pay about 40% tax on every dollar above the 11.7 million estate tax limit per person, or 23.4 million per couple, your heirs might have a large tax bill if you're far beyond the limit. Hopefully, the estate tax threshold amount will continue to go up. However, I wouldn't bank on it with President Biden. A life insurance policy can help your beneficiaries pay for any tax liability from your estate. High property taxes and ongoing maintenance costs are the reasons why many historical mansions are gifted to the state. Their heirs simply couldn't afford to take care of them. Life insurance is a good deal. At some point, you truly may be sufficiently wealthy to not need life insurance. Maybe that net worth is over $10 million per person, the ideal net worth amount for retirement. Ultimately, it's an individual decision. But for the mass majority of us with dependents, having life insurance is a good idea. You can always reduce your coverage amount or cancel your policy as your wealth grows. That's what I plan to do. I like knowing that my wife and kids will get an extra $1 million in case I'm stuck in a ravine somewhere with my car on fire. And I like that life insurance will pay for a good portion of my estate taxes if the estate tax limit gets lowered back down in the future. It also makes me happy knowing that my kids will never starve, even if my wife ends up spending everything or getting bilked out of everything I leave her through a revocable living trust. Financial independence and life insurance. Life insurance is relatively cheap for people on the healthier side of the spectrum. You don't want to wait until you have some type of illness before getting a quote. Just having something as common as sleep apnea can cause your premiums to quadruple. If you're middle class, then life insurance is even more valuable to your dependents than if you're rich. And if you're wealthy, the cost of the premiums are such a small percentage of your income that it makes life insurance also worthwhile. Providing peace of mind to your loved ones is a major reason why people buy life insurance. It's a universal factor for people of all income levels, even those who are FIRE. You just listened to the post titled, "Why Get Life Insurance If You're Financially Independent?" by Sam of financialsamurai.com. As someone who doesn't have life insurance, I do think this article made some valuable points. The reason I don't have life insurance is simply because I don't have any dependents and I don't plan to have any dependents. I do know people who want to have children eventually, and they'll buy a 30-year term life insurance policy at 30 years old, even when they aren't in a relationship. So in theory, it could be years before they're married and/or have children. The reason why they do this is so that they can secure the lowest premium possible, as life insurance does get more expensive as you age. Term life insurance is relatively cheap, so for someone with dependents, it seems like a no-brainer. The average cost of life insurance is $26 a month. This is based on data for a 40-year-old buying a 20-year, $500,000 term life policy, which is the most common term length and amount sold. If you'd like to learn more about what goes into determining the cost of life insurance, check out episode number 1803, titled Top 5 Non-Medical Factors That Affect Your Life Insurance Rates, by Jeff Root with GoodFinancialSense.com. That's a wrap for another Friday show. Have a great start to your weekend, and I'll be back tomorrow where your optimal life awaits.